because of Trump tariffs and all. People are
Yeah.
now looking at gold and silver ETF.
India, very, very tough. Very, very tough. The prime minister just left. He's a great friend of mine, but I said, "You're a friend of mine."
So, Siddharth, welcome to my podcast, Nirav Panchmatia podcast. We are on YouTube, Spotify, and Apple Podcast, but primarily on YouTube. Let me introduce you formally, and then we'll go to the topic of the day. So, for the
Sure.
benefit of viewers, Siddharth Srivastava is head of ETF products and a fund manager with Mirae Asset India Managers Limited, namely Mirae Mutual Fund. Siddharth has had 12 years of experience in the field of financial services and stock market. Prior to Mirae, Siddharth, you were a senior manager at National Stock Exchange, managing their indices from September 14 to October 2008. And prior to NSE, you were at Morgan Stanley Capital International from November 2010 to August 2014. Siddharth, you are head of ETF product and a fund manager at Mirae. You are in charge of all passive products, exchange traded funds. And amongst the funds that you manage are Mirae Asset S&P 500 Top 50 ETF, Mirae Asset NYC FANG Plus ETF, on which we'll spend some time. It's a wonderful product. I have been a very big proponent until a month back. Okay. You have Hang Seng Tech ETF, which was also very popular very recently. And you also manage Mirae Asset Global Electric and Autonomous Vehicle ETF. And also Mirae Global X Artificial Intelligence ETF, which was another of my favorite product until Trump came in the picture. So welcome to the podcast, Siddharth.
Thank you very much for having me on the show, and it's great to hear that you like a couple of our products. And sad to hear that Trump has disrupted some of those,
Yeah,
but hopefully, from a long-term point of view, those products will remain in your portfolio if they suit your profile.
right. So Siddharth, we'll make it a little bit, more like a tutorial this time around.
Yeah.
So we'll ask, I mean, I have a very young audience. So let me start. What is an ETF? Is an ETF a mutual fund or is it something else?
ETF falls under the mutual fund gamut. The difference is that an active mutual fund tries to outperform the benchmark. So the objective of a large cap mutual fund will be to take position in stocks and sectors in order to outperform Nifty 50 and Nifty 100. Right? They may or may not invest in a let's say Nifty 50 constituent or a Nifty 100 constituent. They may take a overweight position or an underweight position in a stock or in a sector, or completely skip altogether. It completely depends on fund manager philosophy, fund manager analytics, his investment style, etc. Right. On the other hand, ETF is a mutual fund, but it's a passive mutual fund where it simply tries to mimic the benchmark, mimic the underlying benchmark. So there are 50 stocks in Nifty 50 right now. Each have their own weightages. Each stock has their own weightages. And the objective of ETF is to buy all 50 stocks in the same proportion. So here we are simply trying to, in an ETF, replicate the underlying benchmark. Now, the benchmark can be of multiple type, right? And that is where the world of ETF becomes very interesting. The most sorts of plain vanilla products are Nifty 50 ETF, Nifty 500 ETF, Nifty Mid Cap 150 ETF, Nifty Small Cap 250 ETF, right? And the name suggests that where the investment is going to be, right? In
Yeah.
Nifty 500 ETF will be buying all 500 stocks in the exact same proportion. But interesting thing happened when we tried to create unique benchmarks. So in India right now, smart beta products are very popular, where
Okay.
new benchmark exists which tries to target a certain behavior or a characteristic like a momentum or a low volatility or a quality or a value or a growth, etc. Then you can have a benchmark which is targeting a certain theme, right? For example, electric vehicles. We
Yeah.
have launched an ETF which tracks a benchmark which tracks the entire EV supply chain in India.
Right.
And this benchmark was developed by NSC with our feedback and the intent that we want to do a product on this particular theme. Similarly, like you mentioned, there's a FANG benchmark which tracks 10 equal weight US stocks. So my point which I'm trying to make is that ETF started with a concept of giving market returns of a
Hmm.
particular segment. Nifty 50 large cap return, Nifty mid cap 150 ETF mid cap segment return, small cap 250 ETF small cap segment return. But then it has evolved more and more, right? It has in a way provided investors with options in themes, strategies, sectors, etc. For example, Nirav, you might be bullish on right now private banks,
Uh-huh.
right? So there is a private bank ETF which exists in the market. There's no private
Wonderful.
bank mutual fund, right? You might
So
be
if I
interested
want
in.
to, yeah, so if I only want to bet on private banks and not bet on public sector banks,
Yeah,
the year I have a private bank ETF where you only own the ICICIs and HDFC banks and the Kotaks of the world, okay,
absolutely,
without having any exposure to the public sector banks.
absolutely, absolutely.
Wonderful. Yeah.
Yeah. So basically, the ETF popularity starts with core products.
Hmm.
People see that active funds are not outperforming benchmark as significantly as they used to do earlier or as consistently as they used to do earlier. The higher cost is associated with them. So a lot of people shift towards ETFs or index fund which are simply mimicking the benchmark. That is a
Okay.
core portfolio. But then people also look at products like I mentioned, private banks or EV based product or AI based product because they feel that these are the segments or strategies or themes which are not present on the active side. So why not simply use a passive fund where such option is available and simply invest, right? And I think that is where in last 2 3 years actual growth has come in because yes, Nifty 50 investments were growing, but now people are looking at all these smart beta ETFs, silver ETF, gold
Gold
ETF,
ETF.
right? That has got a lot of flows. And then one very popular product, Nira will be surprised, is Nifty Next 50 ETF,
Okay.
which which invest in smaller 50 large cap companies. I know it's a sort of
Hmm.
a
Hmm.
weird way to say smaller 50 large cap companies, but it invests in large cap companies ranked from 51 to 100.
51st, 200. Yeah.
Yeah. So these companies are typically underrepresented in most of the active funds because agar aap large cap allocation you look at, people
Hmm.
will be tilted towards largest banks, largest IT companies, largest consumption companies and auto companies, and probably a bit underweight on Nifty Next 50 companies. So that is where people add on to Nifty Next 50 exposure just to get that segment in their portfolio also. So that is where I
Okay.
think a lot of growth is coming from products which are not available on the active platform but are present on the passive platform.
So let me sum it up, Siddharth, and correct me if I'm going wrong somewhere. ETFs, full form is exchange traded fund. Okay. One, the modus operandi is if you want to buy an ETF, you buy it via a demat account. Okay. That is where it is a bit different from a mutual fund. You can buy a mutual fund from a demat account, but you can buy it in a physical mode also. ETFs you only buy through a demat account. Initially, when the ETF started, they were made to mimic the popular indices of the respective country. Started in a country, United States. That is where they were born. Okay, and they were Vanguard is one of the very popular company with one of the biggest holdings in ETFs. It is a passive product, as you said. Normal mutual funds are active funds. Active funds, as in there is a fund manager, and the fund manager decides what goes into that product. But ETF, as you said, is a product where you mimic the benchmark. But of late, people like you, Mirae, have come out with some innovative ETFs, like your FANG. FANG stands for Facebook, Apple, Amazon, Netflix, and all, where you mimic a certain portfolio or you create your own index and then you mimic it. Okay, which is not a typical headline index of a nation, right? So,
So I think, yeah, like you very rightly mentioned, and I should have also mentioned that in my initial phase of the answer, that one of the utilities of ETF is also that it trades like in stock on the stock exchange.
okay.
So you can buy ETF and sell ETF at intraday net asset value. You also mentioned that ETFs can be based on headline indices or the indices which sort of we create in association with benchmark companies in order to sort of provide a completely different solution. For example, we have 28 ETFs right now, Nirav, out of which
Okay.
14 ETFs were first of its kind ETF when they were launched in India. So almost
Wow.
50% of our products were the first of its kind in India. So that is how sort of we play between plain vanilla options and obviously focusing on strategy and thematic options also, which can fit into investors' satellite portfolio.
Yeah, I can see amongst the unique ones, you have a Mirae NYC FANG, as I had mentioned earlier. You have an artificial intelligence ETF, and you also have a Global X electric and autonomous vehicle ETF, where you can buy the entire supply chain of electric vehicles around the world. So those, I believe, are very unique products, which are first of its kind. Uh, and one thing very important, let me sum it up for the benefit of viewers. A mutual fund will have an NAV once during a day, a working day. Whereas an ETF, you said, have a constant NAV as long as the markets are open. Now, let's come to precious metals, gold and silver, which I believe because of the recession likely, very likely to happen in America because of Trump tariffs and all. People are
Yeah,
now looking at gold and silver ETF and gold and silver. Also, spend some time on what is a fund of fund, how is it different from an ETF. So
yeah.
tell me about gold and silver ETF. What is this animal? Okay. Are you supposed to keep physical gold equivalent to your AUM? What frequency you audit, your physical gold and stuff like that. Please elaborate on gold ETF.
So see, first of all, now since SGB is closed, right?
Yeah.
We are not expecting any
By
fresh
SGB,
tranche of.
you mean for the benefit of viewers, sovereign gold bonds, which are issued by the government of India.
Yeah,
And I believe they might find it very expensive to redeem it on the maturity period. So they are doing a, premature redemption of sovereign gold bond.
correct.
So
So
sovereign
now,
gold bond are no more in the picture.
yeah. So now ETF, gold ETF is the only regulated investment vehicle for buying and selling gold or for investment in gold, right? And the entire process is sort of set up by under SEBI guidelines, etc. So SEBI
Okay.
says that for gold ETF, we have to buy LBMA certified, London Bullion Market certified gold, which is of at least 995 purity. 995 is equivalent to 24 carat, but 995 purity gold, LBMA certified, only 1 kg bar.
Okay.
Okay,
Oh,
so we are buying physical gold. Now that gold, obviously we procure it from bullion traders, and there is a custody which is there for different AMCs have different custody, and there is a separate vaulting place where we vault this 1 kg gold. So when we are creating fresh units, we are buying 1 kg gold. When we are selling or redeeming units, we are selling 1 kg LBMS certified gold. So there is whole lot of checks and balances in the back end, which talks about the purity, talks about the certification and everything. So and there's a proper storage, obviously, and everything is in a very sort of regulated manner for the gold ETF. Now, SEBI has also allowed AMCs to that they can use gold futures also to a certain extent, but I think apart from one AMC, no other AMC is sorts of using gold future, including us. We typically buy only gold bars for and sell gold bars in case of creation and redemption. Yeah.
So Siddharth, let me quickly come in here. So if a Mirae mutual fund has a gold ETF and in AUM of how much do you have approximately as of today?
Around 600 crores.
So if Mirae Gold ETF and Mirae Gold Fund of Fund have an AUM of 600 crores, you are supposed to have 600 crore worth of 24 karat 99.95 purity gold in your vaults. True?
Yeah, yeah. So
Okay.
so current AUM is roughly around 730 crores. So I'll be
Okay.
having roughly that quantum of physical gold in my vault.
But investors keep buying and selling them. Your AUM is going to change on a daily basis. So
Yeah, yeah.
how do you
So
account for that?
so I can only buy and sell in a 1 kg bar only. So right now,
Okay.
if yeah, so for example, if my AP, my liquidity provider wants to sort of create fresh units from me because he has sold X quantum, I can only provide him by creating units corresponding to 1 kg gold bar.
Okay.
Yeah,
Fine.
and same happens in the case of redemption also.
Okay. Now,
Yeah.
Siddharth, that gold futures thing that you mentioned, it is surprising to me. I was not aware of that because I know very well that international gold ETFs play a lot in future. And in fact, that is one of the reason we'll talk
Yeah.
about it, why there is so much volatility in gold prices and silver prices. I didn't know that regulator allows it. To what extent it allows it? So out of your 100% AUM, out of 720 crores, what percentage you can have in gold futures?
I have to check actually, and let me. I can get back on that, but it's a fair percentage which is
Okay.
allowed by SEBI to invest in gold futures. So
Okay.
the quantum is pretty there, but see the problem is that once we analyzed,
Hmm.
we saw that if you look at rollover cost and everything,
Hmm.
it wasn't materially creating benefit to invest in gold future. At least that is what our analysis talked about. That if you include the rollover cost and everything, because future you have to roll over, right? You cannot take the delivery, etc. So when you're rolling over and everything, the cost benefit analysis didn't play out, and probably that is why a lot of AMCs are not investing in gold future when it comes to gold ETF and buying physical gold itself.
So right now, it is right to assume that most of the gold mutual funds in India, operating in India, and gold fund of funds, okay, they are mostly somewhere between 95 to 98%. They are having physical gold equivalent to their AUM.
Yeah, 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 absolutely.
Okay. Now there is something known as a gold fund of fund. So for
Yeah.
the benefit of my viewers, let me tell you, ki gold, there's an underlying gold ETF. A gold fund of fund is a gold mutual fund which you can buy via your mutual fund distributor and invest in gold. Indirectly, you are investing in gold ETFs. Okay. Can you want to elaborate more on that?
Oh, yeah, like you said, see, ETF, gold ETF, you can buy and sell on the exchange,
Yeah.
right? If there is intraday volatility in gold prices, go and buy at that level on the exchange.
Hmm.
Hold it as long as you want and sell it. There is no exit load. There is no. You can buy one single unit also. You can buy, for example, gold ETF at 80, 85, 87 rupees, etc., or one single unit also, and do all that. But a lot of people, for example, do not have a demat account, do not have a broking account, or they do not want to have the hassle of buying themselves, right? They prefer the mutual fund route, or they prefer the SIP, STP route also. So for them, fund of fund is there. Fund of fund, as the name suggests, buys gold ETF itself.
Okay.
So in case of fund, you can you can invest in a fund. In this case, you will get the day end NAV, like in case of any active mutual fund or regular mutual fund, and you can do SIPs, STPs, etc. Having said that, I think a lot of broking platforms also now allow ETF SIPs also, so you can do it there also.
But in the long run, if you're investing in a gold mutual fund for a
Yeah.
very long period, yes, these TRs, total expense ratio, do matter. But in the long run, it doesn't make that kind of a difference. I think after Indian equity and US equity, gold has given the highest CAGR, especially for Indian investors, if you look at a 10, 15, 20, 25-year period. But one has to
Yes.
be aware of this and be sensitive to it.
No, absolutely. I was just saying that people should be aware about it, right? It's
Yes.
very important to take an informed call.
Yes, yes. Now, Siddharth, tell me one thing. What's your opinion on gold? A lot is happening by the time this podcast is out. Every day feels like a week, and a week feels like a month, and a month feels like a year under the new president in the United States. Okay. And I think he has brought a lot of attention to gold and silver. What's your
Yeah.
opinion on gold? Do you have a opinion on the gold price? Why do people buy gold? Why should you buy gold ETF, paper gold? Okay, what are the merits, demerits? Elaborate on that.
No, I think we are having a podcast at a time that by the time this goes live, everything I said might be completely wrong. And people will say, what has this guy said,
Yeah,
right?
possible.
That is because that is how quickly things are changing. So I'll try to be a bit not diplomatic, but I'll say see a couple of things.
Hmm,
There's no doubt that gold has run up significantly, right?
hmm,
So I was reading World Gold Council report, which says that from 2,500 to 3,000 USD, I'm talking in
hmm,
USD terms,
hmm.
gold covered that distance in just 210 days.
Okay.
If you look at previous $500 increments, and obviously base effect hai wahan pe, so
Yeah.
that movement would have been much higher in percentage terms, but still incremental $500 increment on an average happened in 1,700 days. So this was a very quick movement which has happened, in 3,000 ke baad bhi we have seen gold crossing 3,100 level. So this movement was, I think, is too quick, and some consolidation, and I've been saying, was expected in gold and sorts of happened also. Gold has sorts of retracted from 31,000 plus levels to now,
I think it is around
not,
2,900 something today.
yeah, I'm sorry, not 31,000, 3,100 level. And now,
$3,100 per ounce.
yeah, and
Hopefully,
now,
we'll go there someday. You never
and
know.
now,
Okay.
so, so,
Yeah, it
so,
had gone to 3,100 level and retraced back to on the day of this podcast, it is around 2,900 some level. Yeah.
So some, I think this was expected, some consolidation, because that's how market works. If something run ups too quickly, there's bound to be some consolidation which is expected to happen. But then just look at the tailwinds which are in support of gold, right? As of now, we are still seeing central banks buying gold, right? We don't know how they will respond post all this tariff hike, but we haven't seen the data which says that central banks have changed their behavior,
Mhm.
right? Second important thing is that we are talking about recession in US. We are talking about global economy getting a hit by almost 1 to 1.5% in terms of growth getting negatively impacted by that quantum. We are talking about trade war, tariff wars, etc. We are talking about people not sure where to invest and what sort of negative impact this entire thing will have. And whenever there's a sort of time of uncertainty, gold typically does well, right?
Okay.
Yeah. So gold. looks like a safe haven in terms of we are sorts of still saying that buy golds at dip, and that's the best way to do staggered investment, because gold has run up too quickly. But I think the macro condition still supports gold unless until we start seeing data that there has been a significant selling from central banks and from other institutions which have been holding gold in last 1 2 year. We haven't seen the data yet, so that's why I'm seeing that a lot of things can change in next 1 2 weeks. So it's very important to look at data. But see, why do people invest in gold? Because it's a very good diversifier of risk to your overall portfolio, right? If you look at the correlation of gold with equity in the long run, in past 10 years, it's almost negative, right? In past 5 years, it's almost let's say almost equal to zero or so. So by if you add such sort of asset class in your portfolio along with equity, you typically get a better overall risk profile of your portfolio, right? And I'm pretty sure gold will not give returns which it has given in last 1 2 years. Of that, I think I'm pretty sort of sure of that. In last year, it has given almost 22 23% return. That sort of return for next 2 3 years, we will not see. But even a 10 12% return, or even a flattish gold will be good for your portfolio, because it will ultimately, from a risk point of view, help risk mitigation. So I think don't add gold more if you already have, right? But if you have lesser exposure to gold, if you don't have exposure to gold, I think staggered investment is also something which you can look at right now. And frankly, this market is very volatile right now, very fluid right now. Only thing good you can do right now is follow a good asset allocation. It's very difficult to take a sectoral, thematic, or a bet on a single asset class. It's
True.
good to follow asset allocation, and if there are dips, those are buying opportunities. In So I think just take benefit of those.
Right. So let me ask a question on behalf of a layman investor. How safe? So this is what we call a paper gold. How safe are gold ETFs and gold ETF fund of funds?
Gold ETF is from I think if when you're talking about safety, it also implies price safety also, if I'm
No,
not
so
wrong.
I'm not talking about gold price risk. I mean,
Yeah.
we Indians are take a bet on gold based on some calculations, right? Okay,
Yeah.
so forget the market risk for an angle. Otherwise, okay, rather than buying a physical gold, rather than buying a 100-gram gold coin, if I go with a gold mutual fund, a gold ETF, and a gold fund of fund, how safe are they? Okay, is it a direct, almost a direct, indirect proxy to a physical gold, or is there some issues there?
I think gold ETF is probably, as I mentioned, now that SGB is gone, probably the safest way to invest in gold. You have LBMA certified 995 purity gold, which is properly certified, etc. Custody, vaulting agents, everyone come into play. It is properly SEBI regulated. So in terms of purity, no risk. In terms of storage, no risk. All those risks are there when you are buying physical gold, right? You're not all the time very sure about what sort of purity you are getting when you're buying physical bars, right? There is wear and tear, there is storage risk also, there's making charges also,
Making
right? When you're
charges, yeah.
yeah,
Yeah.
that is also significant, right? When you're, for example, if you're if you're buying gold for obviously for wearing it, obviously gold ETF is not for you. But if you're buying jewelry from an investment point of view, कि हाँ रख लिया एक अच्छी बनवा करके, what if after 10 years that design is out of fashion, etc., you again have to get the entire making remodeling, remaking done, etc. So I think from that point of view, gold ETF does not have making charges. Gold ETF does not have a safety risk. The gold ETF does not have a purity risk. So if you're looking for investments, I think this is one of the best way to invest. Additionally, like you mentioned, that you can use intraday volatility also. You can buy gold exposure at rupees 85, 86. You don't have to buy 1 gram, 100 gram, 10 gram of gold and look at thousands of rupees as investment in it. If you have 1000 rupees, you can still buy gold ETF for
Gold
investing
ETF.
or gold
So
fund
there's
of.
there's there's divisibility, there's surety of purity, there's a
Yeah,
surety, there's a backing of physical gold behind gold ETF and gold fund of fund. A jeweler
correct.
cannot take you for a ride as far as gold ETF is concerned. This is my favorite, Siddharth. It cannot be stolen.
It cannot be stolen. Yes.
It cannot be stolen. There are no storage costs. Okay. The only thing difference is the expense ratio. Just be aware of that. And one should buy a gold ETF or a gold fund of fund as far as an investment is concerned. Most important, you can do an SIP as small as what? 500 rupees a month?
Yeah, yeah. Now you can
Now
do
it might be.
SIPs also. Yeah, you can do SIPs in ETF also. You can do SIPs in fund of fund also, and all those things can be done. So it's pretty sorts of convenient way to invest in gold and silver, and I hope sorts of this picks up because, like I mentioned, that it's transparent. There's no issue on purity, safety, like you mentioned. So I think right now there was data, and I don't know whether Nirav you know about it, and I had to read it twice. Which World Gold Council said that by 2023 end, Indian households had 25,000 tons of gold.
Hmm.
Right.
Yeah.
Is yeah. RBI holds around 879 ton of gold. This is January 25 ending. And
Hmm.
ETFs
Hmm.
only own right now, this is October ending data, around 55, 60 ton of gold. So there's a long way to go if we
Hmm.
have to sorts of uh, push people and sort of change their investment habit when it comes to gold, right? It's okay to sort of buy gold for jewelry, for festive purposes, but when you're looking for investment purposes, I think ETF and fund of fund makes a lot of sense.
And Siddharth, I have a gut feeling that over the coming months and coming years, Indian housewives, our wives, our sisters, our mothers, our grandmothers, great grandmothers, might prove to be a very intelligent investor. The fact that they've been hoarding on gold and silver, little pieces of gold and silver all along for generations in India, I believe they, in hindsight, might be proven to be a very wise investor based on what times we are seeing.
Yeah,
Uh,
I
th-
think pretty sure I can see that example in my family itself. My
yeah,
father was a keen investor, looking at PSU's defense and everything, and look
uh,
at his portfolio and look at my mother's
and your
portfolio.
mother is doing better than your dad. Yeah, mother who's holding gold is doing
Yeah.
better than dad who's holding. And I think that those times are here. I mean, the next couple of months, your mom, can give a comment to your dad regarding that.
I'll just throw a bit of caution to what you're saying. Like I mentioned, that times are so
Volatile.
volatile, and we have not seen such tariff-related issues. We are undoing of globalization,
Globalization. Yeah.
right? So I think what people should again look at is constructing a good overall portfolio allocation, and not trying to obviously aim a particular asset class in
Not
terms of
not going
going
overboard
overboard.
with anything. Yeah. Doing an asset allocation little bit here, little bit there.
Yeah.
One thing is sure, I think, Siddharth, you'll agree. Never sell gold that you've already acquired.
Agree, agree. But then people obviously say that how will I enjoy returns if I don't sell it? So yeah, it
Yeah.
depends. Yeah, but yeah, having said that, if you don't have a necessity, don't sell gold.
Right. So is gold and hedge against inflation? Very fundamental question.
See, in the long run, yes. In the short term, so in the long run, yes, that has been proven multiple times. in the short run, if you're looking at, again, I've just have to talk about last 2 3 years, right? Inflation has been running high, gold has been running high. If you look at previously also before that, for example, I think I'll have to point out couple of years
Hmm.
where inflation was on the higher side and gold also didn't do well. So if you're looking at a short term horizon, at times correlation does not play really well, right? And this is true for gold versus inflation, gold versus dollar index, gold versus US Fed rates, etc. So there are multiple things which, from a correlation point of view, didn't play out in last 2 3 years, but in the
Hmm.
long run, yes, gold is a good hedge of inflation. In last 1 2 year, we have seen that inflation has gone up and gold has also gone up. So I think if from a long term point of view plays well, yeah. But people should, as I mentioned, that the regime is sort of changing in terms of how world is now functioning. So again, from a short term point of view, people should be bit cautious.
Is gold a hedge insurance against fiat currencies? Fiat currencies like the dollar, like Indian
Yeah,
rupee,
yeah.
like Swiss franc, like euro. See, Siddharth, I don't know whether you are aware. I got a great opportunity of asking this question to Mr. Warren Buffett. Okay, I
Mm.
asked him a question relating to Richard Nixon removing the gold standard. And I asked him, so he gave a very good reply. This question I had asked Warren Buffett 11 years back. And at that time, he was 87, 88. And he told me that since the time he was born, the dollar had depreciated by 95% at that time. Okay. So if we keep all our money in Indian rupee or US dollar or euro or any other currency, currency's purchasing power goes down over a long period of time. Okay. So is gold a hedge against fiat currencies and the stupidity of central bankers?
Yeah, the short answer is yes.
Okay.
Yes, it's
Okay.
gold is hedge against inflation. Gold is hedge against currencies, etc. And these trends tend to hold in the long term. I'm just talking about some of the short term aberrations which people will see in certain times, but in the long term, obviously, yes.
And you also mentioned dollar index. Elaborate what a dollar index is, right? I believe a dollar index is a index of dollar versus other currencies. Okay. So is
Yeah.
what is the correlation between gold and dollar index? And what if dollar corrects? What will happen to gold?
I don't have the exact number, what is the correlation, but typically when dollar is doing well, gold does not do well. When gold is doing well, dollar does not do well. So
They
typically
are inversely proportional,
they're inversely related, yes.
related.
Yeah.
Okay. Okay. That is against the dollar. And what about the dollar index?
So, so dollar index typically denotes the strength of dollar itself.
Right.
Typically, recently dollar index was up to almost 108, 107 level. Now it is down, I think 103 or 102. I have to check, but now since dollar has sort of weakened from its previous high. So when Trump came in, we were expecting dollar to obviously strengthen more. That hasn't happened surprisingly, and the rally in sort of gold has continued. If we sort of not talk about last 2 weeks. So
Hmm.
yeah, so there's an inverse relationship between a dollar index and gold.
And what about the volatility index? So both in India, the VIX, both in India and in US, we have a CBOE volatility index. Is there any data about correlation between gold and the VIX?
Yeah, that's a good question. But see, typically VIX, when VIX goes high, it denotes about more on the fear side, right?
Yes, it's a
That there
fear
is
gauge. Yeah.
yes, it's a fear gauge, right? So when the fear gauge is high, if I have to obviously without looking at data talk about it, then when the fear is high, people run towards gold, right? And
Yes.
that is typically what I'll expect if I derive that particular correlation.
Okay. Okay. Now, similar to gold, you have a silver ETF also. So Mirae might not be having. Let me know when Mirae is planning to. Do we have
We
plans to
we
do
have
it?
we we have silver ETF also.
You have a silver, wonderful. And you do not have a silver fund of fund.
We don't have a silver fund of fund because actually, uh, what we are thinking of doing is sort of filing for silver plus gold fund of fund.
Yeah,
So
interesting.
that is why we have not filed for a silver fund of fund, because gold, standalone gold makes a lot of sense, but we thought that why not play silver with gold plus silver fund of fund. So
That would be a good idea, Siddharth. But I think a silver fund of fund, if somebody wants to take separate calls
yeah,
between a gold fund of fund and a silver fund of fund, I believe, I've always I've interviewed and podcasted your CEO, Mr. Swaroop Mohanty, and I had requested him that whenever you come out with an ETF, do come out with fund of fund. Don't alienate your mutual fund investors. Okay.
absolutely no. We'll do it. It's just that obviously once we see an appetite that we'll be able to float it with a decent AUM, we'll do the silver fund of fund also.
I think there's a huge appetite for that right now.
Okay.
Whatever little I know about the subject. What more you want to say on gold? I mean, I want to dedicate this episode to precious metals, gold and silver.
Yeah. So
Uh, Off the hook question, I'll just add one more question. Any idea about any indication towards a platinum ETF? What's happening with platinum? See, Siddhar, you might not know. I mean, gold is an old product. Silver ETF and silver fund of fund is relatively new. And when there was no silver ETF, I used to ask CEOs of mutual funds, "Ki silver kab la rahe ho?" And I
yeah.
used to get some, they would tell me, the storage cost and all is very high for silver compared to gold. But finally, we have a plethora, at least 15 to 20 silver ETFs and fund of fund in the country. Platinum का कोई इरादा है? नहीं है? क्या है? Does it work? Or
Yeah.
it doesn't make sense?
So I'll first talk about gold and silver. So if we talked about gold, silver is also ETF is also very regulated in the same spirit as the gold is. There we buy 30 kg
Okay.
bars. Again,
Okay.
LBMA certified 999 purity. The entire backend process same. So silver also there's no issue of safety, purity, making charges, etc. So people can be obviously very comfortable when it comes to silver. But people should remember that gold and silver behaves in a very different manner, right? Gold is associated with a safe haven asset. Typically does well during times of economic turmoil. Like we talked about, it's a hedge against inflation. Typically does well when dollar is not doing well, and obviously people bank on it during times of geopolitical crisis, etc. Similar to what is happening right now. Having said that, gold has run up significantly. Silver is it's an industrial input also to solar industries, to EVs, etc. And hence it is influenced by industrial demand also. So it is dependent on how well certain industries and economies are doing. So it is more impacted by sorts of any economic slowdown, any market slowdown, because then the silver demand may get negatively impacted. So while gold and silver both have given phenomenal return, in fact, in last 1 year, and this is March 2020, March 20 end date data. So pardon me for not having the updated data, but yeah, both have given 30 plus return in last one
Yeah.
year.
Yeah.
Gold has given 22% return in last 2 years. Silver has given almost 19.9% return in last 2 year. But if you look calendar year to calendar year, you'll see a stark difference also in certain calendar years. That while, for example, 20 couple of years I'll pick out. For example, let's talk about 2018 when gold gave 8% positive return, silver was negative 0.2%, right? And silver has given negative return in 2013, almost 23% negative. 2014, 16% negative, 15 minus 9% negative. So I'm not scaring anyone. I'm just saying that silver is typically
Hmm.
more
Let
volatile.
let me hold you there. So it's a myth that gold का price कभी नीचे नहीं जाता है. Gold also can correct. And you mentioned a year. Which year was that? When it
So,
went
so
down 23%.
No, so I was talking about silver went down by 23%.
And
At
gold has
that
also
time,
gone down.
yeah, gold was negative in 2013, in 2014, and 2015.
Oh, so these were, I think, one of in recent memory, these were three worst years for gold, right?
Minus 4.5%, minus 7.9%, and minus 6.7% back to back.
Okay. And gold has also gone down double digit negative in some years.
No, I cannot see in any calendar year, and this is MCX Gold, which I'm referring to. So I have data since 2006. I do not see a year when it has gone down double digit negative, but silver has gone down double digit negative twice, minus 23.5% in 2013, and very next year, minus 15.9%.
Interesting. So, okay. And 2013 was a year when gold and silver both had gone down.
In fact, you'll be surprised to know. I don't know whether people know that or not. Silver hit its all-time high in
Yes.
early 2010s.
Yes.
Right.
Yes.
So since that level, which was, I think in 2011 or something, if I'm not wrong, I don't have the exact date. Since that date, we haven't broken that barrier.
Right.
So yes, please look at gold and silver both from an investment point of view, but please also be aware that every asset class has a good phase and a bad phase,
True.
right?
And true that. Yeah. And Siddharth, is it right to say gold is a precious metal, but silver is more of an industrial metal and less of a precious metal?
I'll probably say it instead of a precious metal, I'll use word safe haven. That gold is
Hmm.
more of a safe haven and silver is more of an industrial usage than a safe haven. I think that will be a
Okay.
better way to put it. But yeah,
Okay.
so people should be cautious about volatility, because what I'm seeing right now that people are looking
Yes.
at gold silver ratio and everything, and
Yeah.
they're just jumping on silver, but silver can be volatile. Having said that, again, right now,
As Siddharth, as volatile as equity.
yes, it is in fact.
Silver can be as, I mean, based on the data you are sharing with me right now, it can be sometimes as volatile as equity. Something which
Yeah,
can fall double digit in a calendar
yeah.
year.
So since I'm looking at data since 2010, and Nifty maximum negative return in a year, it has given 23.8%. And like I was mentioning, silver was down 23.5%, so almost equal.
Oh my
So,
God.
so I
Okay.
think you have
I think that's a very
contributions.
interesting point for our viewers. We should highlight that silver also falls 23-24% in a year. What is the maximum drawdown for gold?
So drawdown, so obviously drawdown data I don't have, to be honest, but again, like I was looking at a calendar year data, and maximum calendar year drawdown is minus 7.9%, and this is again MCX gold price which I'm looking at. This was in 2014.
Okay. Okay. Any idea what happened in 2014? I think the markets also went down, right?
No, actually, markets were up by
Went up.
32%.
Market were up
32.8. Yeah,
32.
you remember that was the first time the Modi government came in.
Modi government came in. So markets were up 32, gold was down 7.5 or 8%.
Yes.
So almost by
I think
40%.
I think before that.
Huh.
So again, like I mentioned, that before that there was a great run of gold. So I'll just 2006 onwards,
Yeah.
gold when it went up 20%, then 7 May 16%, then 2008 May 26, then 24, then 23, then 31, then 12.
Oh, so gold had what, 5 to 6 years of bull run,
5 to
followed by
6
a
years.
small 7 to 8% correction.
Yeah.
Okay.
So that's you have to obviously look it into context, and yeah, then it was a super phase of gold which happened, and then obviously
Hmm. That's
it
okay.
consolidated. Yeah.
Utna chalta hai sir. So you also mentioned gold silver ratio. You want to elaborate something on that? Is it reliable? What has been the worst? What has been the less? And then you can come on platinum. Tell me about the gold silver ratio.
No, gold silver ratio is typically tech indicator which people use to just to sorts of decide whether gold is trading at
Premium.
a premium, or a silver is trading at a premium. A higher ratio sorts of defines that gold is trading at a premium, and then people look at buying silver, vice versa. People buy gold, so that's one of the indicator, like which can be used on the technical side apart from 200 DMA, etc. So there are a lot of technical indicators which people use. It is one of those. I prefer typically not only technical but fundamental indicators, also looking at central bank buying, looking at macroeconomic level पे क्या हो रहा है, because that typically gives you a long-term picture that where sorts of gold is headed. Silver is obviously a bit more difficult to predict because right now, because Chinese economy itself is very difficult to predict. Now we have additional layer of tariff issues on tariff, because like I mentioned, that major demand of silver comes from solar, EVs, etc. And the giant in that segment is China. So it depends a lot on how well Chinese economy is doing. So yeah, so I think there are
Also in
multitudes of factors.
semiconductors. Silver is a major product in semiconductors and chips also.
On the platinum ETF, Nirav, there has been no conversation on platinum ETF. There has been conversation in industry around crude oil ETF.
Wonderful.
That was there a couple of years back, but there has been no incremental discussion around that. Globally, for example, we have our sister concern in US. So there we have a lot of interesting ETF, disruptive materials ETF, uranium centric ETF, copper centric ETF. Obviously, we are not investing in commodities, but in companies. But globally, Mirae Asset is sorts of having exposure in these very sorts of can I call it a new age element or disruptive elements which are emerging to be more and more popular in these advanced technologies. So that is something which Mirae is doing globally. In India, obviously at an equity level, you don't have such options, right? We are still into steels, copper, etc. We don't have companies which are into rare earth metals. We
Yes.
cannot create that portfolio, and obviously direct investment in futures, etc.
So can I then this is the follow-on question. What interesting ETFs is Mirae, planning to bring on the table in the next couple of months?
Yeah, so I think we are working on several actually. So recently we launched Select IPO ETF,
Okay.
which tracks newly listed IPO. Post listing, we wait for 3 months period for the volatility to go down, and then we track these companies for 5 years. Then we are working on a lot of internet and e-commerce, because that is one segment we believe that yes, it is volatile currently. Yes, there are questions on PAT and how sustainable the business model is. But see, ETF, it's not just an alternative for mutual fund. It is an alternative of stock investing also.
Yeah.
Right. For example, if I have to buy a pharma stock, let's say tomorrow Trump come and say that no, that interview was a mistake. There was not going to be any tariff on pharma ever. So you, instead of bashing your head that which pharma stock to buy because there's this super positive pharma, you can buy
It's
a
better
pharma.
to buy the ETF. Yeah. I always
Right.
tell my clients it's better to go. So I
Yeah.
give
So,
the example of pharma only. If I don't understand pharma, let me buy the basket.
so if you are not
It's
clear
either
on,
an ETF or a fund of fund, both.
yeah, so there are so many new age companies on e-commerce, and we're not sure that whether I should go for Zomato or Swiggy or Paytm or etc. Just buy an internet and e-commerce ETF. So
Yes.
so that is
Yes.
what is, so we are doing that. Couple of strategy ETFs also, quality, value, new ways we'll create these sorts of products. So interesting, because Mirae, as like I mentioned, that out of 24 ETFs, 14 are the first of its kind ETF in India. We hope that SEBI and RBI restrictions get removed from offshore investing. Once that happen, I think you'll see more and more interesting products which cater to offshore markets. Because Nirav, Yes, Indian markets are very exciting, but I think much more exciting
Is the
thematic
international market.
plays.
Yeah.
Yeah, this is happening internationally.
So Siddharth, when are you bringing a rare earth ETF here in India?
You won't believe, just before the closure, I was actually going in the market and talking about disruptive materials ETF fund of fund in India.
Yeah, and as you are aware, it is a bone of contention between China and America, America and Ukraine. It is
Yeah,
rare earth at the middle of the. Uh,
absolutely. Yeah, absolutely. I think if you look at globally right now, defense tech is something which Mirae as a
yes,
group is looking at. I think personally, disruptive material is something which is an interesting place to be in. We already have an AI ETF, so probably build onto that with a semiconductor if allowed. So all these are sorts of wishes. I don't know when SEBI and RBI limits will be open and when we can do it. But till then, our entire ideation and innovation will be on the domestic piece.
great, Siddharth. It was a great conversation. Let me give a caveat. None of the products that we discussed in this podcast are a recommendation. People should connect to their advisors, their financial planners, their personal finance professionals, take their advice and, and decide whether you want to go for a particular ETF or a fund of fund or not. None of the products are a recommendation. A big disclaimer. Mutual fund investments are subject to market risk. ETFs are subject to a greater market risk. And one should read everything about the product before taking a call. Siddharth, it was a great conversation. Thank you very much. If you want to sum it up, the floor is yours, and then we can end the podcast.
No, first of all, thank you so much for having me here. And like you mentioned, that ETF provides avenue not only to take core exposure in products like Nifty 50s, mid caps, etc., but you can use it to build a satellite portfolio using interesting themes and strategies, or you can use it as an alternate to stock investing. So all these options are there. And in gold and silver, we discussed a great bit. I think in the current markets, focus on your portfolio, right? Focus on good portfolio building, focus on asset allocation. I think that's the best way to go. Don't get too scared. I think this year will provide you best buying opportunity of last 3 4 years, and probably 2 3 years ahead also. तो पिछले 3 4 साल और आने वाले भी 1 2 साल का अगर मैं ऐसे ले लूँ, तो इस साल बेस्ट बाइंग अपॉर्चुनिटीज आएंगी, बेस्ट इन्वेस्टमेंट अपॉर्चुनिटीज. Just don't go overboard. Focus on asset allocation. I think then you'll do well.
And why are you saying this year will provide a best buying opportunity for gold, silver?
I'm talking about all, typically
Everything,
all,
even in
everything.
equities. Yeah,
Yeah,
yeah, yeah.
equities. Yeah.
I think there'll be a sale that we have never seen before. The great sale. What do you call a big sale in United States? There's a term for that, right?
Yeah, Black Friday.
Black Friday sale. I think this will be the mother of all Black Friday sale. The sale is
Yes.
already ongoing in equities. Probably you'll get in other asset classes. But as I said, do consult your financial planner, your advisor, your personal finance professional before taking a call. So that great talking to you. I think, I mean, if time permits, to some other time we'll do a round two of that. And we expect you and your AMC to come out with more interesting products. This podcast was educational. There is no fund recommendation, and viewer discretion is advised. Thank you, Siddharth, for
Thank
giving
you
your
so
precious
much.
time. Pleasure. Thank you.